right, thanks guys for showing up. Just gonna give a little bit of an overview. Let's hope for this thing to load. There we go. Okay, so a little bit about myself. My partner Mike and I actually spent the last year at the TMX building out their crypto asset trading platform. And over the last few months, we actually decided to kind of branch off on our own and found our own company, SigOne Capital. And what we focus on is basically over-the-counter institutional grade crypto trading. We provide liquidity for investors, funds, miners, token projects. We provide them liquidity to a global kind of pool. And essentially, what we're going to be talking about here over the next few minutes is just a bit of an overview of what we've seen over the last year. So 2018 was far different from 2017 as far as the sentiment in the market's concerned. I'm sure a lot of us kind of have felt, the crypto bear market in the winter and a lot of the dampened enthusiasm that kind of got sucked away from 2017. So in 2017, I think we can all agree that was the big year of the ICO. And if you were paying attention, you could see that 2018 was actually marked by a lot of announcements from traditional players, such as the ones on the bottom here. I'll call out a couple specifically because I think they made some very interesting and important announcements. For example, Nomura, which is a bank out in Japan, they announced that they're going to be working on a custody solution with Ledger. We have Goldman Sachs exploring crypto custody, and most notably Fidelity in the bottom right corner, who are actually implementing a crypto custody solution for all sorts of funds. But the activity was not actually limited to the traditional side, because if you look up, we have a lot of, for example, M&A happening with Circle and Poloniex. Circle acquired Poloniex, which is they're an exchange for $400 million. Similar story with Bitstamp. They got acquired for a similar amount by an investment consortium. And if you know of a company called Chain, they used to do all sorts of blockchain development in the space. They got acquired by Stellar for $500 million. And of course, plenty of other activity, notably in Toronto, Hut 8, listed on the Toronto Stock Exchange. So it was a bit of a different story than 2017, which was mostly headlines about the top of the market and which projects raised what amount of money. And so things shifted a little bit. But as a whole, the market really matured. And so what we've seen actually is crypto's developed more into an institutional asset class. For example, we have one of the main stories from last year was that we had investments from endowments. So endowments are traditionally one of the most conservative money managers in the world. We had Yale, Harvard, MIT, Stanford all cutting sizable checks to all sorts of crypto funds. And these funds eventually end up in token projects and infrastructure projects. And this is it's kind of a big deal. Last year, $17 billion was raised through ICOs, and we saw over 200 active crypto funds. How many of those are active now? That's a bit of a different story, but the fact remains that they did exist. Also, Bitcoin actually outperformed every single asset class since 2013, including commodities, bonds, equities, everything. We have right over here a bit of a there's a story to tell here because people talk about the bear market and that mostly in price terms, but if you look at trading volume, this tells a bit of a different story. So yes, the market dropped significantly, we can all agree, but the trading volume on most exchanges is actually still quite significant. So this is a snapshot of the entire crypto trading volumes for all coins, which averages about $10 to $20 billion a day. That's quite significant, and you can see the 30, 180 day and 360 day averages as well. Obviously, most significantly, Bitcoin is still, it's the 800-pound gorilla in the room, 50% market dominance. On average, trades about 5.7 billion a day. This doesn't look like a bear market to me. So, just be mindful of the narratives and look at the numbers and see what they support. Some other interesting things that happened recently. I'll just highlight a few things from this year so far. So, how many people know this guy? Yeah, so he's actually become a bit of a patron saint in the Bitcoin community over the last few months. Jack, actually wait, before I get to that, how many people know what the lightning torch is? Excellent. So for those that don't know, the lightning torch is basically a game that was played on Twitter where followers would, they would issue a receipt for payment for Bitcoin using Lightning Network, and then they would pass that off and add some more Bitcoin to another follower on Twitter. And so Jack very famously accepted the lightning torch and passed it off to Elizabeth Stark, who heads up Lightning Labs. So for the average person in the room, you're probably shaking your head saying, what does that matter? For those of us that are involved in Bitcoin, it matters a lot. He is the CEO of 2 public companies, one of which has 150 million users, Twitter and Cash. The Square Cash app is actually, it provides access to Bitcoin purchases and has been doing so over the last year and have actually sold over $150 million in Bitcoin. And so this is a public company. Jack has also very famously went on 2 very big crypto podcasts, one most notably with Marty Bent from Tales from the Crypt. And he was also caught shilling Bitcoin on Joe Rogan's podcast, of course. All hail Joe. And obviously, the big announcement that came out last week was that Jack famously kind of jumped on Twitter and announced a whole new division of Square that's going to be focused solely on Bitcoin and open source protocol development. They're hiring all sorts of developers. So for those of you in the room that are actively involved, send in your applications. The next big thing, and by the way, these highlights that I chose specifically for this presentation, the common thread between all these really has to do with kind of mass adoption. There's obviously a ton of other highlights, mostly on the dev side, that I chose not to talk about, but in the context of mass adoption, the following companies are obviously very important. Samsung, the S10 phone is going to feature an inbuilt crypto wallet, which is absolutely huge and staggering considering that Samsung last year shipped over 70 million phones. So what does that mean for crypto adoption? Adding 70 million new users to any network is fantastic, and that's certainly going to have all sorts of ripple waves kind of throughout the ecosystem. It's going to be initially featuring Ether and ERC20 tokens, and it's going to feature 4 different decentralized apps. I suspect that this will obviously kind of evolve and grow over time. And I think this is probably one of the more underestimated companies to make an announcement. Recently, Facebook they've been working on all sorts of crypto initiatives. The main one that they've been peddling in the media is a stablecoin that's going to be featured in WhatsApp. And why does that matter? It matters because you're going to be able to do all sorts of payments within the app. Facebook itself has 2 billion users. WhatsApp has 1.5 billion. Again, in the context of broader adoption, these are very meaningful strides. And just to underscore, kind of the importance of Facebook's role in this, they have started, approaching exchanges to list their stablecoin. So these are very significant moves in the right direction. What else? So obviously, we have to contrast the highlights with some of the disappointments. Because we want to give a fair and balanced perspective here. So it's really just unavoidable to move away from the issue of hacks in the space. This is the most recent one. It happened in January. Cryptopia was they're still an exchange in New Zealand, but they were very famously hacked for about $16 million worth of Ether and various ERC20 tokens. The interesting thing about this particular hack was that the coins they weren't moved from one wallet. They were siphoned from 76,000 different wallets that held all these coins. So it was a pretty sophisticated attack. And a lot of the wallets have been kind of flagged and blacklisted. And so hackers can't really move these coins to other exchanges to try and to liquidate them because they've already kind of been flagged. But still a very significant development. This is probably one of the more disappointing ones in my book. I think, who here has heard of Bakkt before I get into it? Okay. All right. So for those in the room that don't know what Bakkt is, it was a project that was spun out of ICE, which is the Intercontinental Exchange. They run the New York Stock Exchange. And it was a standalone project that was meant to also kind of accelerate adoption through various products, one of which was a physically delivered Bitcoin future. And they famously, they announced a partnership with Microsoft and Starbucks for merchant adoption and things like that. And so this project was a huge deal last year. People were talking about it. Everyone kind of considered it the holy grail. Everyone's just waiting for back to launch, and things are going to get great. The market's going to turn around, and we're going to be back to a bear market. But unfortunately, they've been stifled by several delays. One of which is on the regulatory side. Second was there was a government shutdown earlier in the year, and so this is it's really destroyed their efforts to get to market as soon as possible. They were supposed to actually launch in December of last year, and so all these continuous delays aren't really too favorable. And a little bit closer to home, our friends at 3iQ. Anyone know who 3iQ is? Great. So they're a fund manager here in Canada. They've been battling the OSC and regulators for 2.5 years now, trying to get a Bitcoin fund to the public. And unfortunately, they were denied access yet again. And basically, the OSC refused to approve a prospectus based on custody issues, improper regulation, supposed lack of liquidity in the market, which is quite frankly a joke. But what they actually decided to do was to appeal the decision, and so there's going to be a public hearing in April to actually discuss this openly, which is fantastic, and good luck to Fred and the team. And this, of course, brings me to the topic of tonight's discussion, which is the Quadriga meltdown. And this really has the hallmarks of a famous Hollywood screenplay. We have $190 million missing. We have a founder who may or may not be dead. We have a co-founder with a criminal past and multiple aliases. We have auditors. We have a class action lawsuit. No one knows where the funds are. Everyone's trying to track this down, and everyone just keeps getting stonewalled. And this. I don't want to compare this to Mt. Gox because that was just a systemic failure back in 2013. For those of you that were around, but this is it's a really big deal. And those of you who have been paying attention to the regulatory side, you will have noticed that the CSA and IROC actually released a new set of regulations proposed regulations over the last couple of weeks that were actually a direct response to this. And so. Very sad, but important development in the space. And I will stop right there, and then we'll get into the panel discussion and hopefully unpack this a little bit.